Okay, everybody, it's me, Gregory Mannarino. Here we go. You ready? I'm ready, and I know you are too. Let's talk. So Friday, June 10th, 2022, I would say a rather harsh sell-off here on Wall Street. However, I know what you're doing. You are more concerned with the 10-year yield, and maybe you should be, honestly. Let's go look over at the debt market. About a 10 basis point move higher in the 10-year yield today. Okay, we're at 3.15. We started the day at 3.05. I don't like seeing big moves like this. Okay, you know it. I know it. Could this be, honestly, the signal that we've all been looking for? Well, we're going to keep watching that 10-year yield. I've explained to all of you based on what I see here. Okay, I'm talking about the action from the Federal Reserve, what the Federal Reserve is expected to do with regard to the federal funds rate. The Fed is going to be raising the federal funds rate come next week. What will it be? My guess is a 50 basis point hike. I know there's a lot of people calling for a 75 basis point hike after today's abysmal news on inflation, but it didn't surprise me. It shouldn't surprise you either. It's astonishing to me. I'm sitting here today and I'm watching, Bloomberg and CNBC and Fox. I rotate through all the freaking propaganda ministry channels. It's interesting how no one stopped to say that I saw. Maybe you did. I didn't catch this. All the nonsense dog shit propaganda that inflation was peaking. It's peaking. I mean, this is absolute in-your-face proof to everybody. What you and I already knew, that in no way, shape, or form is inflation peaking. Let me explain this to you again in maybe another way. Okay. The Federal Reserve specifically has really, they don't want to stop the pace of inflation. They don't want to stop it. As a matter of fact, they're going to continue to inflate. You know that. Everything else is theater today. I want to talk about theater. Did you catch our retarded president today? The lies that came out of his mouth were pretty overwhelming. He's saying people are richer, they're making more money, but he won't tell you that based against inflation, real wages have cratered faster than ever in history. You're not allowed to know that. He also went on to say that people are saving more money. Absolute complete lie. The savings rate is literally nosediving. And he just went on and on with all this nonsense here. I was writing some stuff down actually. What did he say? Here. Biden lies. This is what I wrote. Biden lies. Biden lies. People are saving more money. Oh, by the way, people have less debt today, which is an absolute complete lie. Consumer debt, household debt, personal debt out of control. So you see, here's another lying piece of cat shit. He's not human either. He's like a mummy or he's a Frankenstein or whatever he is. But this is what we can expect moving forward. They're all the same. They all lie. They all distract. They all deflect. Okay. Anyway. Our economy is so strong, according to him. Meanwhile, today, we got another warning from Bank of America. You ready? Prepare for economic shocks. In other words, things are going to get a lot worse. Where did you hear that before? Oh, maybe right here on this lovely video blog. You know this, people. Look, I don't have to sit here and tell you all these things. Everything is just common sense. We're done. The economy's toast. People are done. They're going out of their way. Our puppet government having their strings pulled by the real government, which is the Federal Reserve, to destroy people, destroy them. And it's working globally. But really, look, I live here in the United States. I see what's going on. So do you. But believe me, they are going to go out of their way to yet again try to convince you that what you are seeing it's just not real. Again, according to our retarded president, people are saving more money. They have less debt and they're earning more money. They're richer. They're absolutely rich. You can't make this stuff up. You can't do it. It's an impossibility. And then again, another warning here from Bank of America. So on the back of a pretty significant sell-off, I would say a harsh sell-off in this market here, the S&P 500 still, people, okay, still is not 20% off its all-time high, which means we are not, as of yet, in a bear market. Not saying, who knows. Let's see how this plays out moving forward. Again, today, look, the market always does one thing, and that one thing is overreacts. It either overreacts to the upside or it overreacts to the downside. Today's sell-off was significant, but again, it's the debt market. It's the 10-year yield, which you and I, as a matter of fact, risk in this market has gained substantially, and we can tell by watching the MMRI. It is now orange. Okay, the next phase, step higher, is full on red. You want to see the MMRI, Mannarino Market Risk Indicator, in real time? There is a link in the description of this video. It's free to everyone who wants to take advantage of it. Okay, so with that said, what else happened? Cryptocurrencies under some pressure. Bitcoin around 29,000. Gold and silver, which started out really bad, made a nice turnaround. The dollar, markedly stronger dollar today. Okay, and this is not a surprise either. People, look, for as far as the eye can see, we will see the comparative strength of the dollar remain higher than most other currencies in the world, because it still remains the prettiest belle at the ball, believe it or not, despite the fact that inflation is out of control and you haven't seen anything yet. But just keep this in mind. The Federal Reserve, first of all, is never going to be held to account for what they have done. They're overstimulating, if you want to call it that, via quantitative easing, money printing, added digits to a screen, since the last meltdown, has created this environment. It can't stop. It can't just turn on a dime. You understand? This is going to persist for a very long time. And again, going back to what I said, the Fed is going to continue to inflate via any other mechanism that comes along, crisis to crisis to crisis, and you all know that. So just be ready. Crude oil today did fall under a little pressure. Okay, as a matter of fact, even the energy sector, the markets pretty much got walloped across the board. And it's going to be interesting to see how this plays out moving into next week, especially. Guess what's going to happen next week? Guess what is going to happen? We're going to hear from public enemy number one, the Federal Reserve on monetary policy. I'll talk more about this on Sunday for my Markets A Look Ahead segment. Anyway, I was just sitting here writing some stuff down, and I want to cover that with you. So on top of this warning from Bank of America on economic shocks, can I get a duh? I mean, really, duh. Did they think we're that stupid? Yes, of course, we know. They have things in store for us that people can't even imagine, even me or you, honestly. Consumer sentiment now craters to an all-time low. You see, what they're telling people is you will eat dirt and you will eat bugs, and you're going to freaking like it. Welcome to, the new norm. Absolutely. Even rich people are starting to feel the pinch. There's no doubt about it. What else did we find out today? Luxury home sales cratered 18%. But the prices continue to rise. And make any of that stuff up, really, seriously. What else? I'm on these little pieces of paper all over my freaking desk over here. Anyway, look, I think I've touched on all the important points here. So yes, a very harsh sell-off here in the market. Are we done? Look, my biggest I don't really care about. I care more about what the 10-year yield is doing than anything else. I really do. You all know that. We had a 10 basis point move higher today. Look, in my opinion, and I've said this many times, you've probably heard it, we're going to settle with regard to the 10-year yield at around 3.25. You know, and we'll see how this plays out next week also as well. After the Fed announcement, are we going to get another big jump here? We'll see. But if we continue to see, again, this is it. This is the key. The one freaking key to the market in my view. If you see 10 basis point hike followed by another, followed by another, followed by another in rapid succession here, that's a sign to me that the debt market implosion started, okay? And once it starts moving like that, it could move extremely rapidly, very, very fast. You will see extreme pressure on the stock market. And then that cash is just going to start to move, people. It's going to move, in my view, into commodities. I also, like I say a million times, I've covered this, into cryptocurrencies whose market cap is going to balloon. Look, we've known about this for a very long time. How this is going to... I've never wavered from this. I've explained this exact scenario for over a decade. The implosion in the debt market is going to happen. It's going to happen. And following that 10-year yield and risk, again, look, understand, once the implosion in the debt market really gets going, the MMRI, Mannarino Market Risk Indicator, again, linked down here, free to everyone who wants to look at it, on my website, right at the top of the second page, and that link will take you right there, will dramatically spike. So look for a dramatic spike in the MMRI. And that's going to let us know that risk is getting absolutely out of control based upon what's occurring here in the debt market. That's really what this indicator does. It's not a crash indicator. And I think, honestly, it's a hell of a good indicator to pay attention to. So that's it, people. I think I covered a lot of stuff in this blog. Let me know what you think about this current situation. I will read the comments, I promise. And I will see all of you on Sunday for my markets to look ahead. We'll try to make the best sense of all of this, okay? We're going to get parts of it right. We're going to get parts of it wrong. But overall, I think we really do understand what's going on. What we should be looking for right now is continued spikes in that 10-year yield, and that'll let us know if this is really the beginning of the actual big one that everyone has been waiting for. We'll see. I promise to keep you on top of it, as always. And pretty much that's it. You know what it means? You know what else we're going to do? It's Friday, people. So we're going to do what we do every Friday. We're going to put all this behind us, really, all of it. All right? And focus on what I believe are the three most important things. You can take the stock market and everything else, but this is it. Are you ready? Bring it in. Nobody's looking. Nobody's looking. I always tell you that. Maybe they are looking, and who cares if they are? Ready? You know what? Honestly, love each other. Care about each other. Be charitable. I will see all of you on Sunday. Like I said, please comment. Please share the video. And, well, that's it.